Let's explore how to apply two different sets of parameters to the same candlestick chart. This approach can help us better identify trends. All the illustrations below are taken from the TradingView version of the Trend Pullback Reversal (TPR) indicator. The setup method for the TPR indicator is essentially the same across other platforms. First, select the time frame you use most frequently, such as the 5-minute chart. In this example, we will use the 5-minute chart for demonstration purposes. You can also use any type of chart, such as tick, Renko, range, weekly, or monthly charts. The first set of parameters will be based on a relatively short-term period. The second set of parameters will be based on a relatively long-term period, as shown in the image. The indicator using the first set of parameters will be applied to the main chart, while the indicator using the second set of parameters will be applied to the subchart. From this chart, we can see that the TPR indicators based on short-term and long-term parameter sets give different trend signals on the same 5-minute candlestick. This is precisely the essence of multi-time frame comparison. Below, we will provide a more detailed technical analysis based on the two turning points marked in the chart, points 1 and 2. 1. Overall trend, dominated by the long-term perspective. The TPR indicator on the subchart, long-term parameters, remains in a red bearish state, indicating that the broader or medium-term trend is still downward. Although the TPR on the main chart, short-term parameters, occasionally shows green bullish signals, these are mostly quick responses to minor rebounds or consolidations, representing oscillatory signals. Conclusion: when there is a divergence between different time frames, short-term bullish, long-term bearish, the long-term trend usually takes precedence. It is more reliable to follow the overall trend and look for short opportunities during price rallies. 2. Point of interest 1. Short-term, false breakout, fails to hold. At point 1, the TPR on the main chart turned green from a previous downtrend, and price showed a structural rebound, a slightly higher high. However, the TPR on the subchart did not turn green, it remained under bearish control. Soon after, the price dropped again, breaking below the previous low, confirming this rebound as a short-term, false breakout. Trading insight: relying solely on short-term bullish signals in this phase could lead to being trapped in a losing position. A more cautious approach is to avoid entering long trades when short-term indicators turn bullish but long-term signals remain bearish. Instead, consider short entries when the short-term trend resumes downward. 3. Point of interest 2. Second short-term bull attempt lacks strength. At point 2, the main chart's TPR once again turned green, accompanied by slightly higher volume or stronger candlestick bodies, suggesting a possible bullish attempt. However, the TPR on the subchart still showed dense red dots at low levels, indicating that the long-term trend remained unchanged. Price was quickly rejected near the 6,010 level, then fell sharply, breaking through the 5,990 support. Trading insight: this second short-term bullish signal appears more like a bull trap within a dominant bearish trend. If you can spot that the subchart remains bearish even when the main chart turns green, it's possible to set up short positions in the 6,010 to 6,000 zone, with a stop-loss just above the short-term bullish failure point. Compared to the previous chart, the current long trend signals are clearly more bullish. The following is a detailed technical analysis. Current trend assessment: bullish trend confirmed. Small blue diamond subchart, long-term, TPR. The indicator turns from red to green starting in the middle of the chart and continues to rise steadily without switching back to red, indicating that the medium-term trend has shifted from bearish to bullish in a stable manner. It remains within an upward channel, suggesting that the market is in a trending upward phase, a medium-term bullish signal. Small blue diamond main chart, short-term, TPR. The signals are more responsive and have switched multiple times, but in the later part, especially on the right side, it turns green in sync with the subchart. This kind of synchronized upward movement indicates the market has confirmed a breakout from the consolidation zone and has entered a new bullish phase. Magnifying glass tilted left structural analysis: breakout from consolidation, entering trend phase. In the left middle part of the chart, frequent red-green alternation in the main chart and sideways price action indicate a base building phase. In the mid-right area, a false breakdown is followed by a sharp rebound, a V-shaped reversal. The short-term TPR turns green first, followed by the long-term TPR, forming a dual time frame bullish resonance, marking the official start of an upward trend. At the far right, a strong bullish candle appears on increased volume. Although this could be a short-term top, as long as the TPR, especially the long-term one, does not turn red, this is likely just a normal pullback within a larger bullish trend. Direct hit multi-period resonance strategy recommendations. White heavy check mark entry strategy. Confirmed signal entry, conservative when both short and long-term TPR turn green and price breaks above the previous consolidation zone, around 6,020. This can be seen as a confirmed breakout signal, a suitable point to enter long. Aggressive entry, speculative if the short-term TPR turns green at a low level while the long-term TPR is still red, and this is accompanied by bullish candlestick patterns, e.g., bullish engulfing, V-reversal. You may try a small position in anticipation of the long-term TPR catching up. No entry stop-loss strategy. If, after entry, the short-term TPR quickly turns red and price falls back below the previous consolidation zone, you should consider exiting to avoid a bull trap. A more conservative approach is to use the long-term TPR turning red as a trend-based stop-loss trigger. Brain take profit strategy. You can take partial profits near previous highs or psychological resistance levels, e.g., round numbers, combined with candlestick signals, like long upper wicks with high volume. If the long-term TPR remains green and continues rising, consider using a trailing stop based on TPR value pullbacks to ride the trend. Summary. The current market phase is a textbook case of consolidation, breakout, trending up, and the dual time frame TPR strategy is performing excellently. The bullish structure remains intact. As long as the long-term TPR stays green, dips can still be considered as buying opportunities. If the short-term chart pulls back but the long-term trend remains unchanged, it could be a good entry point during the correction. Confirm the primary trend. Start with the long-term TPR to determine the overall direction, bullish or bearish. Identify entry/exit points. When the short-term TPR aligns with the long-term TPR, both bullish or both bearish, signal strength is at its peak. Consider entering in the direction of the trend. Use divergence and structure. If there's a divergence between short and long-term TPR and price forms false breakout candles, e.g., hammer, fake-out bearish candles, at key support/resistance, consider a countertrend setup. Risk management, stop-loss and partial take profit. Short-term stop-loss. Place outside recent short-term TPR switching points. Mid-term take profit. Use long-term TPR's resistance/support levels for reference. Final takeaways. Only follow through aggressively when short and long-term TPR are aligned. Treat multi-period divergence as potential bull/bear traps. Combine layered stop-losses, volume, candlestick formations, and moving averages to further improve win rate and trade consistency. We hope this guide helps you systematically apply the TPR indicator for multi-period, multi-dimensional technical analysis. Feel free to contact us if you'd like to explore any part in more detail.